I'm not sure we're quite done with the pain in Turkish assets themselves. Nothing has actually fundamentally changed. Turkey still has a lot of external vulnerabilities and not an adequate policy response to shore up investor sentiment. So I do think this issue is going to come back for Turkey itself. But to your question about how we should be concerned with other emerging markets, we find a lot of them in much better positioned. And when we consider impact on developed markets, even more muted impact. Even if we think about the European financial system, actually limited exposure to Turkey, even when we consider the Spanish and Italian banks.
And yet we got data that much of it was softer than expected from China overnight. China a risk here?
I don't really think China right now is a real risk. It's certainly a risk in terms of heated trade negotiations and whatnot, the things that we've been putting on the back burner for a little while. But going back to what Gabriela just said, my feeling is you look to history, and I think back in 1997, we pretty much underestimated what the impact of Thailand would be. Gee, Thailand is so small, it really doesn't have much of an effect globally. Yet what happened was it did spread. It spread to Indonesia, to Hong Kong, to Korea, and then we had other problems in Russia and in Latin America. Gee, that sounds fairly similar to today. So,
what's going on with the lira? Do you think that that's very similar to what went on in Thailand?
From an economic perspective, our feeling is that no, it's probably more country specific rather than something that could end up, it being exasperated around the globe. But at the same time, it sounds very similar to what people were saying back in July of 1997. The market actually hit a new all-time high August 3rd. We then hit another high in early December, only to fall 11%. And the emerging markets, when all was said and done, were down more than 50%.
If I could take maybe the other side of the argument, I would find that, during the late 90s, we had a lot of external vulnerabilities in a lot of emerging market countries. So it was a lot of rapid growth fueled by a lot of external debt, a lot of foreign inflows. And we find some comfort in the fact that as a whole, a lot of other EM countries have improved those vulnerabilities. It's tough to find the Turkey examples, right? It's really only a couple, not even a full handful of EM countries that are this vulnerable at this time.